Welcome everybody, thanks for tuning in. In this video, I'll be commenting on the recent outperformance in Chinese equities and Hong Kong stock index. And I will give you my opinion why I think we're seeing a fundamental shift and also what the future holds in terms of additional catalysts and things to watch out. In the end of the video, I will also commenting a little bit more on specifics like, for example, NIO and why it's lagging and what might be coming there. So I hope you watch it till the very end, and also I hope you smash a like so that will be shared with more people. And if you're not subscribed yet, please make sure to be subscribed to the channel. So first off, we have to talk about this picture, and I think if you're watching deeply, then of course you have been aware that she has been gathering some business leaders in the last couple of days, and that was a big catalyst for namely Alibaba stock, because here, what is he doing? He's shaking hands with Jack Ma, and that itself is very, very big news, as this has been a very big bear argument in the past that, for example, business leaders are like Jack Ma are disappearing and have been, punished for the fact that they have tried to capture more power, or that the businesses themselves have to become too powerful. And therefore, the narrative, the argument built up here was really that China is uninvestable because companies and entrepreneurs, CEOs, are not longer incentivized in order to build the most profitable businesses. Now, here's the big pivot, and it's coming out of the mouth of Xi Jinping himself. He is here saying literally have the ambition to serve the country, be dedicated to development, abide by the law and operate well, and promote common prosperity. So, people have been reacting very negatively to common prosperity. That was the overall narrative why China is not investable, because it's all, communist, and companies only need to share their profits. And here's the most important part. He's saying all of that by getting rich first. So that's almost Deng Xiaoping type of stuff. It doesn't matter whether or not a cat is catching, is black or white, as long as it's catching mice, right? It's really about setting a new priority here, which is allowing people to make profits first, because that's important and necessary in order to have something to share with society later on. And that coming from the very, very top down, I think that reminds me of the signal that people have been waiting for. If you've been watching every video that I'm doing, I've made a video about meeting the CFO of Xunlei in the past, where he told me in a private conversation that people are watching, they need a signal from Beijing about, what's going on, how are we supposed to operate as business leaders? Are we willing to invest in R&D into our companies and so on? And can we reap the benefits of that? And I think this is exactly such type of a signal, acknowledgement from the very top. And that's kind of, really smashing this whole negative narrative out there that China, first of all, is uninvestable and China is not for profit seeking. We've heard lots of things reshaped in the last couple of months, from broadening out measures to improve the financial markets, incentivizing companies to buy back shares and so on. And all of that is now, I think, peaking with this very U-turn signal here, and big statement that is, if the whole incentive or the whole start of the narrative of selling out of China has been that she was putting common prosperity on top, then logically this must be actually the reverse, right? So this is the fundamental shift that is happening, and I think a big part why HSI has been soaring. However, if we're just comparing it with different geographies, you can see China is still very low valuated in terms of PE ratios or price to sales ratios, depending on if you're buying value stocks or if you're buying, growth companies. It doesn't matter. But overall, these global equities, but in particular China and also Brazil, are very, very low valued here. And parts of that is because of the Fed raising rates, US dollar spiking, but also these geopolitical things, and also those narratives and ideological things that is preventing institutions from buying Chinese equities, in my opinion. And still, until today, I think that with this recent rally, we haven't really seen a re-rating or revaluation of Chinese equities. And I think the arguments are there that this is what should happen. We should see an equalization of the valuations in the very, very long term. And that's why the point that I'm trying to make here is that this will be hopefully or it should be a long-term trend, no matter what's happening in the near-term future. Of course, there will be waves and maybe some setbacks in between there. For example, we now have obviously Alibaba earnings coming up, and you never know. Those earnings might be good, they might be bad, they might be good, and the stocks might still be tanking because it might be the point where they say, okay, now it's priced in for the short term. Let's wait and shift our focus to something else for some time. I wouldn't read too much into something like Alibaba earnings because the second point that I want to make here, I think fundamentals still don't count as much. That's explicit here by those PE ratios. If you would rate these companies based on their earnings and on their growth, they should be somewhere else. So I think currently the rally that we're in is still much a sentiment-driven shift based on the DeepSeek stuff that I've covered on the channel here. This was an emotional, positive momentum shift. Even the Chinese themselves started to believe in themselves again. And you get these animal spirits coming out again, and people see like, oh, wow, we can actually do something in the tech world that is comparable with the US despite sanctions and everything. Plus, now the leaders coming out, the business gatherings and the politics playing into that narrative. So all that coming together and helping the overall indices, but not each of the stocks yet, right? So we've seen that, there have been laggards like BIDU, like JD, like NIO, some smaller companies, small caps. I've got a basket of small caps, for example, Kanjun, like a real estate stock. That sort of stuff has been lacking, didn't get traction even during those HSI rallies. And so that's where I want to put also my outlook also a little bit more on the NIO side. I think while we're seeing the sentiment shift, and I think the reason why some of these companies have not gotten traction yet is that they are simply not part of this excitement about DeepSeek, for example, and so on. But NIO, for example, could have their own sentiment shift catalysts coming up. I made videos about that. I think the NIO self-developed chip could be some sort of NIO's DeepSeek moment in terms of if this goes along with a China announced breakthrough in some sort of advanced chip making capabilities, and NIO demonstrating that with the ET9 launch and the future models that get the chip as well. That could be a moment itself, not depending on where are the sales, where are the cash burn, where is everything else. That doesn't matter at that point, in my opinion, if something like that is happening. Plus, what we also might get for NIO, of course, is a help with the stronger seasonality picking up. So over time, you will get natural, more better sales anyways. And for Onvo in particular, I mentioned a couple of times that I believe for now, the issue is mainly with the standalone branding strategy. And after some while, we may see improvements on how they are marketing it, and also, a stronger brand building and more awareness and so on. So, these things could come potentially in the mid and the second half of the year naturally, and then help also with the story around NIO. And that's not even reflected on what's happening with the earnings at all, right? So I'm just using this chart here. This might not be, it's still undervalued in general, the whole space. So no matter what, if we get a pullback now in Chinese equities or not, or if it keeps on rising, I think the arguments are there for a rise, but as you know, it's always cyclical. And there are still things that could happen. So overall catalyst that I'm looking for is what's happening between a deal with Trump and China. I think we now see the next catalyst, which still needs to unfold, is the end of the Ukraine war, which is kind of really ending the Atlantic Alliance in a way, and alliance away, and that's kind of really putting more focus on the US-Europe relations than the US-China relations in a sense. And I think if there is peace in the Ukraine at some point, this would also really enable institutions to get back into the China space, because it would remove one of those ideological barriers, in my opinion. So that's a future catalyst to watch as well. Takes a bit more time. It seems as Trump didn't fulfill this promise to end the war in 24 hours, right? But he's on there, and he also wants to achieve some sort of a deal with China. And that's possibly not priced in there, as Brendan Ahern, CIO of Grainger, is saying the geopolitical narrative media prevents US institutional and some global institutions from buying Chinese stocks. A Trump-China trip and Trump-Xi trade deal removes the geopolitical allocation headwind and will change the US media narrative towards China. I completely agree with that, and that hasn't unfolded yet. So that, when the institutions are coming back, that's when we see them, buying the dips and also the even into the excitement. And then on top of that, we might even see an acceleration of the Chinese economy based on the stimulus issued last year, and then future stimulus and working committees meetings and stuff like that during this year on top, as China is bottoming out on the real estate consolidation and that stuff. So all in all, that's how I'm seeing it currently with some catalysts in the current rally. I hope you find that insightful. Let me know in the comments what you think about it. Thanks for watching, and see you in my next videos.